Hey Brandon, so can you tell us a little bit more about the one-time construction loan?
So the one-time construction loan program that we offer, we get a client in, like we're pre-approving them a normal loan, but instead of maybe them finding a 100K lot, putting 20% down, that $20,000 that they were going to use to maybe put it on the land, they'd be able to qualify the whole construction loan, putting the mortgage together and all. Basically just pre-approve them as normal. We make sure debt is aligned, credit, make sure the work history is there, and we can close anywhere from 30 to 45 days tops on a normal construction loan. You have to then qualify here, then we send you to a bank. The bank now takes a little bit longer sometimes, so it can be another 30 to 45 days. And at this point, you can be under contract for pretty much like 3 months before a builder starts kind of calling you, hey, we need the money, or where are you at in the process and stuff like that. So the one-time close program, I know we've had one with Kratos and you guys yourself. We had one that closed in about 30 days, everything. They own their lot. They didn't have to build in a certain subdivision. If they own their lot free and clear, we can even use that as a collateral as their down payment. They don't need to come in with the extra 3.5%, closing costs and stuff like that. Yeah, and then we look into the area they want to build. And sometimes the biggest thing is you want to keep in mind is if you own a lot in maybe a subdivision that has a trailer, maybe one house, another trailer, a small shack, that could throw off some stuff, and you could potentially run into some issues if you're trying to build this $300,000 house where next door is an RV trailer, next door is a mobile home, and there's only one corner lot that has a house, you know what I mean? So it's always good, again, with a realtor and a builder, everybody's always working on the same page. Everybody gets together, we game plan, brainstorm, and then just kind of hit the ground running.
What does a client need to bring to you, cross-country mortgage, to get a pre-approval for a one-time construction loan?
So to get pre-approved, it's again on a one-time and then a regular mortgage loan. It all kind of falls into place and everything kind of commingles together. What we would need to get you pre-approved is last 30 days pay stubs, the most recent bank statement, and then the biggest thing and where people run into the issue is that they're like, oh, well, someone told me I had to be there for 2 years at my current employer. It's not always like that. We just need to be able to document a 2-year work history. So say you were self-employed for a bodega or something like that, and then now you got your teaching license, now you're becoming a teacher, and you get hired at Edinburgh North High School, and then now you're a teacher there. All we need is 30 days pay stubs to qualify you. We just need a document that you have a 2-year solid work history to be able to pre-approve you. And after that, all we need is 30 days pay stubs, and again, the bank statement, and then just to make sure credit's in line, and whatever we can do to maybe bump you up on credit, the higher the better.
Hey Brandon, so if I have a buyer who is self-employed, what does he or she need to bring to you to get pre-approved?
So we actually can't pre-approve them. Nah, I'm just nah, man. So a self-employed borrower, the biggest thing is always tax return. They always want to make a lot of money but report very little money, and sometimes that's where we run into the situations in mortgage, because they make $100,000 on their 1099, but they take $90,000 of expenses. That bottom line is what we're using to qualify them. So again, you always want, if you're looking to purchase a house in the beginning of the year, you know tax season's around the corner, you know you might get a refund, and or you just want to get the house. Sometimes we would advise you to maybe report a little bit more income so you're able to qualify. There's pros and cons to it, but you're able to get into the home instead of, okay, well now I have to extend a 12-month lease. So it's always good to get with your local mortgage lender, just so he can inform you if reporting $50,000 this year or slightly more than last year or a little bit less than last year is something that's needed to qualify for whatever price range house you're looking for. Then it's something you want to definitely talk about with your mortgage lender before you file taxes, because once you file your taxes, now we would have to wait a whole year and or amend your tax return, which could get into a little bit of a hassle, because then you're going back to your CPA, you're paying them again to basically do the same work, but you're changing it up a bit, you know what I mean? You're changing a few numbers that had we done it prior and gotten together prior, we would have been able to kind of make the transaction a little bit smoother.